What's going on, everybody? Zack Brittain here with Phipps Brittain Real Estate. I'm a local real estate agent and investor here in Waterloo Region, and in today's video, we're going to cover how you can finance your very first investment property. Myself and my partner, Matt Phipps, have lots of experience working with investors, from first-timers to various seasoned and experienced investors, and everybody in between. And in this video, we're going to go through the 4 common ways that you can finance your very first investment property. This is a perfect video for anybody that's considering investing in real estate or starting to make arrangements to pick up their very first investment property. Stick around to the end of the video. We're going to be covering a few scenarios as well as a specific instance in which you can purchase an investment property with less than 20% down. So stay tuned for that, but let's get right into it. The first option for you to finance your first investment property, and where we recommend most of our clients start, is a conventional bank loan. And these are the big 5 banks here in Canada. These are great options for people that have savings or access to capital and have steady income. That's what these banks are going to be looking for you to qualify, and typically the very first stop we recommend to our clients. The second, and arguably the most common way that people finance their very first investment property, is through accessing equity from an existing property. Now, this can be done through a complete refinance or a home equity line of credit. The first part of this is going to be a complete refinance. And this is very common for individuals who have purchased a primary residence that has appreciated in value and given them enough equity to be able to go out and purchase an investment property with that money. What you'll do is you'll get a brand new mortgage on your primary residence, up to 80% loan to value, and you'll be given a check from the financial institution that's giving you your new mortgage to go spend as you please. Typically, what a lot of clients will do of ours, and a lot of first-time investors, will refinance that primary residence and take the equity they're given from their refi to go place on a down payment and cover the renovation costs of their very first investment property. The third way you can finance your first investment property is alternate lending institutions. Now, this can range from credit unions to large lending institutions and smaller lenders. And what I want to talk about in this space is that the rates and the terms and the options will vary dramatically in this classification. What we can tell you is, general rule of thumb, is the more flexible their criteria are, the higher the interest rate or the option for fees may increase as well. So if they're really flexible on the criteria and the variables and the people they're willing to lend on, expect to pay a little bit of a higher rate. At the same time, there are lots of lending institutions and lots of lending options in this space that range from rates competitive with the big banks all the way up to competitive with private lenders, and that's what we're getting to next. The fourth option to finance your very first investment property is a private loan, often referred to as private money. These are typically loans from one individual to another directly, and the loan terms and rates vary dramatically. They're often determined by the relationship, the individual, the project, the track record, and so forth, but generally speaking, these rates are going to be higher in exchange for the flexibility compared to the other options. You can get a private loan for the down payment, for the whole project, for just the mortgage, or just the renovations, depending on the lender, depending on the project, and really what you need. Ultimately, this option offers the most flexibility, but also the most variance in terms of the rates and terms that are offered with this lending option. So the 4 common ways to finance your very first investment property is the conventional bank loan, accessing equity through a refinance or a HELOC, alternate lending institutions, and then private money and private loans. Now, the 5th way, and actually a really common way for our clients and individuals investing in their first investment property here in Waterloo Region, is kind of a combination of these options. We're going to go through a really common scenario for people right here in Waterloo Region and how they're financing their very first investment property. All right, guys, so we're going to go through a really common scenario that is actually very similar to a lot of our investor clients we've helped over the past few years. Now, in this scenario, it's very common for investors to start with a primary residence. Now, a lot of people that have purchased primary residence here in Waterloo Region, single family homes within the last 5 years, they've probably purchased a single family home between $500,000 and $700,000, 2, 3, 4, 5 years ago. Now, those homes are typically worth anywhere from $900,000 to $1.1 million now. So let's assume, if that's you, you probably have anywhere from $200,000 to $300,000 in equity that's accessible in your property right now. Once people realize that, and also realize that they have some other savings set aside in that last 3 or 4 years that they've lived in their home, they have enough equity and cash set aside to be able to go put that money down on a new home. So what a lot of people do is they refinance their primary residence. Now, what that does is you're putting a brand new loan on your primary residence. You loan it up to the 80-20, and you're taking about $200,000 to $300,000 in equity out of your primary residence to use as your down payment on your very first investment property. Now, in our market, the most common and typically one of the more popular choices that we recommend for our first-time investors to use as their first investment property is a duplex. And what you can do is you can take that $200,000 or $300,000 as your equity from your refi on your primary residence, and you can use that as your down payment to purchase a duplex that's gonna cash flow. And what that looks like is duplexes in Waterloo Region are typically selling between $900,000 and $1.1 million in our current market. So you refinance your primary residence, 80-20, you get a lump sum check, and you say, awesome, Zach, Matt, I'm ready to go shopping for my very first investment property. You go and you purchase with your equity from your primary residence a duplex. Awesome. You have a 2-unit property that you get 2 renters in, and if you're getting current market rents on those properties, you are going to be cash flowing a few $100 a month for the down payment that you've taken out in equity. So now you have a primary residence with a brand new loan on it, fantastic, and you've used the money from your primary residence to purchase a cash flow positive duplex between $900,000 and $1.1 million. This cash flow positive duplex is gonna make you a few $100 a month. Now you have 2 new loans, one on the duplex, one on the primary residence, and in the coming years, as the market appreciates, you're gonna be building more equity in both of those properties while you're paying down the debt. You'll be paying down the debt on your mortgage on your primary residence yourself, and then the tenants that you have in your legal duplex are gonna be paying down the mortgage on that loan. Now, this is a very common way, and honestly, a very good way to start your investing career. Now, this is just one way that you can do that. These deals can still make sense if you're using alternate lenders, private loans, home equity lines of credit, and other financing options depending on your personal financing situation and the type of property and numbers that you're going to be working with. So at the beginning of this video, we discussed that there'd be an option for you to purchase your first investment property with less than 20% down, and this is the scenario which this could make sense. What some of our past clients have done is they've had a primary residence that they've been at for a little while and built up some equity, typically a townhouse, a condo, smaller detached, or a semi, and they're ready to move up into a larger property, or they'd like to get into an investment property while keeping their first home. What you can do in this instance is you can move into another property that also has additional units you can rent out. In this circumstance, you can put less than 20% down because it is a primary residence that happens to have other units you can rent out for an income. A really common scenario for this is a younger buyer who's purchased a townhouse, a condo, or a smaller property, and that has appreciated a lot in value and refinanced that primary residence. With that new refinance check, you can go and purchase a property, and a more common one is a duplex or potentially a duplex conversion that you could put less than 20% down. Now, you would have to incur CMHC costs if you're putting less than 20% down, and there are ways to figure out if that is going to make more or less sense for you financially, but this is a really good way for an individual who would like to purchase another home but doesn't have access or doesn't want to use all of their capital to put 20% or more down on an investment property. This can be a fantastic way to get your very first investment property while keeping another property that can still profit and still appreciate for you, and can be a really good way to start and build an investment portfolio here in Waterloo Region. So now that you know how to finance your very first investment property, what's next? If you're ready to start looking at listings, hit the link in the description for our investor hot list. This is where we are going to send you all the hot deals right here in Waterloo Region every single month. Now, if you need a little bit more help or you want to do a one-on-one consultation to set yourself up for success, go to the link in the description for the Contact Us. Select the Investor tab. Let us know what types of deals and situation you're currently in right now. Myself or my partner Matt will get in touch directly to figure out what the next best steps are for you. Now, if you're ready to do some more research, we also have you covered. We have previous videos discussing duplex conversions, as well as how to start and scale an investment portfolio right here in Waterloo Region that you can check out on the channel. For everybody else, thank you so much for checking out the video. If you like what you saw, smash the like, hit the subscribe button if you want more of this content, and drop us a comment if there's any specific questions or concerns that we can help out with regarding these topics. Thank you so much for checking out these videos. We'll see you guys next time.